Okay, Pat. Hey, you guys. Hi, everybody. Hi, how are you? Can you hear me okay? Awesome.
Yeah, you sure can.
Hi, happy Wednesday, everybody. Happy Wednesday. Is everybody having a good Wednesday?
Not too bad.
I see Connie's got a little doggy in the background there. Who's that
I
sweet
got four.
thing?
I got four.
Oh, girl, four.
I know my midlife crisis last year was buying dogs. I should have bought a convertible, but you know what? I got both actually, to be honest. So whatever.
You know what? Listen, whatever gets us through our midlife crisis is totally fine. I'm with you. Like we're allowed to do whatever we want in midlife.
Right? My husband though has said he'll divorce me if I bring one more home. So
I understand. I understand. I have a dog as well. I wanted cats, but my husband's like, hell, he doesn't want, no. So I don't know. We're still fighting about that. That one's like ongoing. I'm not letting go of that one. Awesome, you guys. Well, good to see everybody. Hi, Corey. How are you?
I'm great, thank you. How are you?
Amazing. You're a new face. Joanne, we've got some new Andrea, Brandon. I don't know any of you guys. This is David doesn't have his camera on. He's hiding. Is that because you're having lunch or you just, oh, Isabella. Hi, Isabella. Look how cute you are. Oh, so pretty. Oh. David doesn't have his camera on. He's hiding. That's okay. You're allowed to hide. Have
Yeah,
just got
that's because I'm eating, shoving food down my throat.
Oh, I just like scarfed some food to come back in here to like not be chewing on my lunch while I was talking to you guys. All right, we'll go ahead and get started. Amazing. Thank you for coming, you guys. It's great to meet you. Hi, Heather. Hi, Heather's coming in. Heather and Cody. Hi, you guys. By the
Hey,
way, hi, how are you?
I'm great. How are you?
Good to see you, girlfriend. If anybody
Thanks.
tried to
You
come
too.
into the office hours last week, I'm so sorry. Zoom was actually down. Did you guys know that?
Mhm.
It was down. So I did a quick chat GPT and Zoom was down in China. I don't know why that meant like we were down here too. But then I saw that Pace Morby had a Zoom and a lot of people were like, we're trying to get in and nobody could get in. So I apologize if you were here last week and then we couldn't make it happen. Hi, Latasha. Oh, hi. She's got her sweet baby with her. Hi. Oh, you can smell the baby from here. Love that.
Yes.
Love,
Hi,
love the baby
everybody.
smells. Yeah. Did he just wake up?
Yes, they did.
Oh, they're so sweet at
So,
that age. Then they grow up to
mhm.
be 17-year-olds where like their feet
Oh,
smell and the room's a disaster. Yeah. Oh, he's a little boy or a little girl.
a little boy.
Oh,
Yeah,
sweet. You can
hi.
never tell, can't tell at this age. Hi, sweet boy.
Yes, hi.
Hi, sweet
Say
boy.
hello.
Oh, hi, sweet boy. Corey's
Say
like,
hi.
okay, we're gonna do the whole, you
He just
know,
turned 4 months.
he's so sweet. Oh, girl, yeah, you're in that sweet phase, right?
Mm-hmm.
Brandon and Corey are like, oh, what are you guys doing over there? You're doing the whole like mommy thing. I'm a little long in the tooth for babies, you guys. Like there ain't no more babies happening over here. You know what I'm saying? This lion is like ready to go into the backwoods and die in terms of gestation. Okay, we'll go ahead and get started. So I usually open it up and give just a little background on me. And just so you guys have some context on kind of who I am and what I've done. And then I want to open up the floor and let you guys ask questions. We'll talk about deals, lending, scaling businesses, selling businesses, whatever you want to talk about. Totally. There, by the way, there's nothing you can't ask or say here. This is a safe space. It doesn't, we're, I don't think we're recording. Well, we are recording, but if you don't want us to put anything up, just say, don't put this up. I want to ask it. And then we'll not put that part up. My name is Rhea Campbell. I am an investor. I spent the first 12 years out of college working for Fairmont Hotels and Resorts, Four Seasons, and for Hyatt Hotels and Resorts. I started in operations, and I finished my career as national sales manager for Fairmont. So I'm classically sales trained by some of the best brands in the world, both from an operations perspective and from a sales and marketing perspective. But it never really fit working for somebody else. I always wanted to do things my own way. But in my family, my father was the CEO of a drug company in Canada. And so success was a corner office and a business suit and $150,000, right? In Canada, I think my dad made more than that. But in Canada, that's, that's a pretty good, or it was back then. That's a long time ago, you guys. And so I tried to sort of follow the traditional path because that's all I knew. And it never felt like life fit, like I was like the shirt never really fit me. And then I moved from Vancouver, Canada to Chicago, thinking that that would inject new blood into my career and I would be reinvigorated. And I got here, and you know that saying, like wherever you go, there you are. Well, guess what? It followed me. Me followed me. And about 9 months after I got here, I thought, oh no, this is not for me. And so I had to make some changes in my life. There were some other personal things going on, made some dramatic, radical changes. I traded futures on the floor of the mercantile exchange for a couple of years. I put my own money in a trading account. I put on a trading jacket and I traded Eurodollar futures in a pit in the Chicago Mercantile Exchange. If you guys have ever seen the guys, 9.5 bid, right? The arbing. And I did that for 2 years. It was the greatest experience of my life. I grew up with brothers, boys. I've got a lot of male energy, so super comfortable in that environment. There was nothing that they said that could faze me. In fact, I think some of them were horrified by sometimes things that I said. So I could match them, no problem. But I joined the trading pit when the trade was starting to move over to Globex. So it was just starting to become computerized. For a while, it was quite good. I had a handheld computer and I would buy it in the pit and sell it on the computer or sell it here and buy it here. And there was like 2 tick wide spreads, right? Just easy money. And then when the computers really took over and the algorithms, high frequency trading you guys have heard about, oof, that's just started losing money every day, just massive amounts of it, like literally. And when the guys in my pit, because there were only 2 of us females, when the guys in the pit started fighting me for 25 lots, that's when I knew the trade was over. Like if they're fighting me, because they used to always be like, oh, Campbell, we'll give you sell you 100. They were like really generous when they were making gobs of money. And then I met my husband. He was my boyfriend at the time, and married into more of a traditional Jewish family. And his father-in-law was I think my father-in-law was sort of horrified that I was a trader. Right? Ooh. First of all, non-Jew trader, like what the hell is that, right? Like so not what they were thinking. And so they were cool, but he said, hey, you should take a look at commercial real estate. I have these amazing deals. And he was really well known here in Chicago. I'm in Chicago. Very lovely man, amazing human, really well liked by a lot of people. And so in the Jewish community, doors open for you, right? The Jews help the Jews. And I was married to a Jewish man and all the doors were open for me. My daughter-in-law, or my soon-to-be daughter-in-law, wants to get into commercial real estate, and here in commercial real estate is kind of a close, tight-knit group. So I transitioned over to CB Richard Ellis. I started working in commercial real estate, and I did what's called tenant representation. So I represented occupiers of office space in the acquisition and disposition of office space. I was a little bit older, so I didn't really join a team because I think the guys there didn't quite know what to do with me, because they normally bring in young guys. And they rise up through the ranks and they put them on the phones and they do cold calling. And I don't think they knew what to do with me. Female came off the trading floor a little bit older. And so I wasn't on a team, and I just built my own book of business. For the first 2 years, I made 50 cold calls a day, built my own Salesforce database, and I just worked phones. And commercial real estate, they're big deals, right? You make hundreds of thousands of dollars on a deal, but it can take a full 2 years before anything pops out of your sales funnel. So that's what I did for 22 years. I left CB Richard Ellis after 5 years. Again, pseudo-entrepreneurial, right? But still not fully entrepreneurial. And I thought, I can do this better. And I have ideas on how this should be done. And so I wanted to spread my wings, and I did. I left. I started my own firm, Bellaterra Partners. I had a client that came with me. It was a national client, turned into an international client. And for the 17 years after that, I worked on their entire real estate portfolio around the globe. And then I woke up one day. Well, I wouldn't say I woke up one day. Then my husband and I started a direct primary care concierge medicine practice. I wasn't supposed to be in his business. He started with a partner, and his partner sadly died 6 weeks after we opened our first location. She was young. She was 40 years old. She dropped dead right there in the office. And he said, like, you have to step in. And I said, step in, like I'll step in the interim because I was running my own company. And 9 years later, I never stepped out. I stepped in and stayed in. So I ran both those companies for the 9 years. And then in January of 23, I looked around and thought, I don't own these buildings. And many of the guys that I started with 22 years ago own some of these buildings, 200 and 300 and 400 million dollar assets. And they own many of them. And we're still friends today. And I thought, maybe I've been doing something different. Maybe I should be doing something different. So I decided that it was time for me to start building my own real estate portfolio. I've always been a lone wolf. I've never had a mentor. I didn't know what masterminds were, or any of those things were. Heard about them. Found Pace Morby. I don't know how. I'm the most unlikely person to find Pace Morby on YouTube and to actually think that that's like, oh, that's cool. Let me sign up for that. But I did. Something spoke to me, and I did, and I signed up for it, and I got in, started mixing it up. So I am a lender. I am a borrower. I borrow on my own deals. I run a land business. So I buy and sell land all over the US. I'll flip it. I'll subtitle. I'll subdivide it. I haven't done any entitlements, but I have done some minor subdivides. I typically buy assets creatively. Bought a hotel in Dover, Vermont creatively, syndicated the capital raised $2.3 million, stripped it to the suds, and relaunched it at the end of 2024. Pace is actually one of our investors, which was kind of cool. I'm running the Resilient Investor Workshop there in May. So it's a 2-day workshop where Veena Jetty is coming in to talk about capital raising and Vive Funds, which is a fund that she runs. I'm going to talk about a couple of the case studies, the hotel and the mobile home park that I own, and some other things. I bought a handful of single family homes and realized, oh no, that's not what I want to do. I own them sub 2 and seller finance. They're fine. Those will sit forever, right? You just pay down the mortgage and whatever, it's great. I bought a mobile home park. We were going to buy it sub 2. Seller went and talked to the bank, pivot, did a purchase lease option with an irrevocable right to purchase so that we had substantial economic control because we wanted to cost seg the property to get the depreciation. So there was a whole complicated structure to that required a bunch of different pivots. I run a fractional community. So I run a program called Copilot where people who are nervous to lend or don't have the time to underwrite, don't have the deal flow, they can actually be a part of my Copilot program, which is on Fractional, and contribute money, make investments into the fractional community, and then I help them turn their money over for them. And I'm writing my first book. I use a lot of AI in my companies. So I have a little OCD. I have a lot of OCD, and not enough to be medicated, but just enough to be like really annoying for the people around me. And like my husband's like, he's a doctor, right? And I always say to him, do you think we should medicate me? And he's like, no, you're not bad enough to be medicated, but you're just really annoying because I don't let go of things. I can't really let go of things until like they're buttoned up. And so I'm always looking for the most efficient way to do things. And I'm an entrepreneur. It makes no difference what it is. I like to make money, but I like even more than I like making money, maybe number one, but I really love it when people make money with me because, what's the sense of like making money? Like after a certain amount, it's like, it's fun, but it's like, okay, well, like it doesn't do that much after a certain amount. We sold our direct primary care practices. So I had 5 locations. We sold those last year to private equity. So I had an exit. I took a company full cycle, which was pretty amazing and fantastic. And now I am solely focused on building my investment businesses, and I run a variety of them. And so that's my background. So you can ask me anything that has anything to do with those things, and I'll tell you the good, the bad, and the ugly. There's probably a really great group of experience here in our little group here. So if I don't have the answer, there might be somebody here who has the answer. And so I just want to open it up and see, like, does anybody, like, does anybody have any pressing questions or things that they want to talk about? And if you don't, then I will talk about something specific that I want to talk about. Oh, what does Copilot do? Andrea. Oh, yeah. Okay, good question. We'll learn. Oh, good. Thank you, Mike. Oh, thank you for putting the Copilot thing in there. Yeah. Copilot is, so I lend my own money, and I realize that there's a lot of people that want to be lenders, right? They want to make good return on their money, but they either lend to the wrong people, they don't send it to, they don't underwrite the deal. There's all sorts of things that they don't do, and they get burned, or the deal doesn't go well. And right. And so because of the volume that we were lending, we had to set up a process, a system. I have a team that does all of our lending. And I thought, well, why don't I actually allow other people to tap into the system as well? So I established this program called Copilot, where you can sit in the Copilot, or I sit in the Copilot seat. Like, you're the lender, I sit in the Copilot seat. My team will do everything for you, right? Like we have all the deals, right? We'll bring them to you, we'll show them to you, you say, oh yeah, I love that. That looks really good. And we'll run it. So you can learn and earn. And maybe you learn and you go, oh yeah, I totally get it. I don't need you anymore. I'm going to go do it on my own. Awesome. No problem. Love it. Or you're going to say, oh my God, that is so much work. Heavens no, I do not want to do all of that work. And you can just keep, helping me do this. But what we found was I have about $3.2 million in Copilot. There's so many people that want to do this. So I moved it over to Fractional. Fractional is this community. I'm going to grab the Fractional link, actually. I'm not sharing my screen. Doesn't matter if I am. Here, I'm gonna share. Let's see. How do I find that? Copy the URL. There it is. I'll share it. And there's my Fractional community. Fractional is a platform, a technology platform where everybody can, so I have a community in Fractional, and then I have a project. It's called the $1 Million Investment Club. And you have to make a minimum investment of $25,000. Everybody goes into a joint LLC together. Fractional administers it to keep it compliant and, issues the K-1s, does all the tax statements, issues all the money out to everybody by pro rata, right? So pro rata, if you put 25,000 in, you would get your pro rata share of whatever had been lent out. And then I bring the deals. Every single week, every 2 weeks, there's a whole list of deals that are already in there. You can see what we funded and what's ready to be funded. And then you have to have a quorum, and everybody will vote on whether this looks good. Returns are between 12 and 15% annualized, and it gives you the ability to learn and to earn. Only do first position. I don't do second position. I do second position myself. Sometimes I'll even do third position, but I don't do that with other people's money. I'm a risk taker, but I'm not when somebody else is in the deal. But the bigger the risk, the bigger the reward. I just want to tell you that. I did an EMD deal for 500,000 and made 150. Heather is here, right? Heather was the connector on that. So there she is right there. You see Heather in red. And well, so let's talk about that. So that deal, I don't know why nobody else was funding that. I don't know how I got it before other people got it, because there wasn't a lot of information. So I think the borrower wasn't putting up a huge amount of information out there. And so
That could be true. Yeah.
right, and so people are nervous, right? I don't have a lot of information, nervous. I'm not really a nervous lender. I've learned, I pull the trigger and I walk right up to the line. I make sure everything's buttoned up. And if it's not buttoned up, then I'm going to say, hey, I'm missing critical pieces of information. So sometimes speed wins, even in lending, but you don't push that wire button until you have absolutely everything, right? And so you say yes, as long as this all checks out. And then went ahead and did. So I think because I just jumped on it. I was like, yeah, I'll do it. And then we'll get the information after I commit to doing it. Because the borrower needed somebody to commit, because he was like, I got to put this EMD down. I need to know someone's going to back me. And I got to make sure it's the pony that's not going to poop out on me. Because, sometimes people say, yeah, I'll lend to you. And then like at the day of closing, I'm not going to. That happened to me once. And I was like, oh my God.
Yeah, that's horrible. Yeah.
Can I ask a question?
Yeah, please.
Okay, so for that example with Heather, obviously the co-pilot, I'm assuming you're gonna, where you kind of say like, okay, you underwrite it, or I mean, how much paperwork is there in it? Just because I know I've been kind of reading and trying to learn what's normal and customary and different things. I mean, I have an underwriting background of like, unfortunately, just home equities. I don't know if I think more like a bank, so I'm kind of more conservative, I guess.
There's a lot of underwriting. So, let me tell you what, so I always lend on the deal.
Okay.
I do check out the person, make sure the person knows what they're doing, first position, lending on the deal. So I'm typically when we underwrite it, we're going to underwrite the cash flows. We're not going to do a linear underwriting because if you can't carry the interest every single month and you're going to end up drawing down or going negative and the borrower doesn't have a pot to piss in, how are they going to pay your interest? They can't. And you're going to end up like I do second position loans. Hard money is going to end up foreclosing, and then you're going to be the junior lien holder, right? So, Andrew, you probably know a lot about that if you've done some underwriting. So, underwriting is I'm looking at the asset, I'm looking at what they think the ARV is, I'm looking at the statement of work. What kind of buffer do they have in? Do they have every single line item in there? I looked at some underwriting where they didn't have a garage door, he didn't have floors. I'm like, okay, like you're missing some things from like the scope of work. Like you need $40,000 more than what you have in here. Like it looks like a good deal without the 40,000. Then you put the 40,000 in. You're not making enough money. So the sponsor needs to make money, right? And then my loan needs to be protected, needs to be securitized, right? So I need to know there's equity in the deal. And there needs to be equity in the deal if the borrower poops out and I have to fire sale it and I need an attorney and my time and right. So I'm only probably going to give X amount, right? Now, if it's a really good deal and it's a hot market and things are selling and there isn't a lot of geopolitical risk around tariffs and cost of goods for the statement of work, like right now, that's kind of uncertain. So you got to build a little extra buffer in there. So that's the underwriting that gets done. Usually the borrower will send me their underwriting. We don't use that. We use our own underwriting. So I have my CFO he was a professor of finance at a university. I mean, he does a detailed line item. We don't miss anything because we find that borrowers, like they don't have the taxes and insurance in there. Like, guys, you got to carry that, right? There's just some things that they miss. And then I want them to have a margin. They need to have a 15% margin on the total sale of the property after also paying me back, just because like markets can bump around. Then you need the mortgage, you need the promissory note, you need a personal guarantee. Warning, personal guarantees are no good if everybody's personal funds are in a trust. So like if I give you a personal guarantee, like I don't really own anything, right? Everything is in a trust. When we sold our company, our attorney rejiggered everything, right? Everything is in trust. There's literally nothing that somebody could come after, right? I mean, so you're really going to be looking at the person and going, what kind of integrity did they have? Did they do good deals, right? Because the assets are all in LLCs. So you always want to think about that. So, personal guarantee from someone though, I sign a personal guarantee so that if there ever is anything in my name, right, you could go after it. But like, you just really need to just look at the person. So that's the paperwork, but there's more paperwork than just that. So if you're doing a loan that's bigger than $1 million, like you want to make sure that the title agency has something called, it's an insurance policy called errors and omissions, right? So what if the title agency only had a $500,000 policy and I did $1 million loan and they mistakenly wired the funds to somebody else? I would only be able to go after their E&O for $500,000. I'm going to be out $500,000. Like really, that's the truth of the matter. So there are some things on smaller loans, you don't really have to worry about that. Like their E&O is going to be a decent amount. It's usually going to be $1 million. And then, obviously wiring the money takes time. Checking, calling and proving out that this is the transaction. Lots of wire fraud, right? It's just I lend. It all takes time and energy. It's definitely not passive. And then when the project is running, so there's a couple of things. We write into our promissory notes that they're in default if they don't communicate with us on a monthly basis. And there's very specific details that they need to give us because we want to be watching the progress and making sure that the house is actually what you said you're doing with, if it's a house, for example, you are doing with it. And we don't give the rehab draw up front. We dole it out just like hard money does. And I need signed lien waivers and receipts dropped into the Google file in a special, and then my CFO goes and looks at it and he says approved to distribute another 25,000. So there's some ways that you can protect, right, some of that money. And then ultimately it's the deal. So in Copilot, though, specifically, when you make an investment in Fractional, right, you click that button, you're going to pay 2% of the, let's say you want to, let's say you say, I want to dip my toe in and I want to be part of this Copilot. Then you would click the button. If you click on that little Fractional, you'll see there's a blue button and you click on commit. The minimum investment is 25,000. And then every week I bring different deals to the group. Right. And there's a list of deals that are actually waiting to be funded. I was going to fund them. I'm going to like, those are my deals, right? I'm going to fund for other people. That's sort of money that I put out there. But what happens is I have so much money out that like I run out of money. It's a good problem to have, or if a loan that's coming back in doesn't come back in time and I've made a commitment. And also, oh, great. You joined Fractional, Heather. Awesome. Amazing. And you learn and earn. The way that you learn is that you're going to see how I present a deal. You're going to see all of the deal flow. You're going to see how we underwrite land, how we underwrite single family homes. What are the transactions? I just did a transactional funding deal. It was $85,000. It was for a land investor. It was supposed to be a land loan. First position, 55% of ARV, but he sold the property before he closed. Great problem. Now he's like, now I need transactional funds because it's a double close. So I just went and wired 85. Now the paperwork, Andrea, is really important. That paperwork needs to say, my funds never leave escrow. So A to B funds, I fund that. B to C, those funds have to come in. The end buyer who's buying has to come in. They have to put their money into escrow before you use my money to close the deal, because then my money's protected. So I do two things. There's a whole bunch of paperwork that goes to them, plus a memo giving the escrow officer instructions. And then I personally call the escrow officer and say, hi, Judy, it's Rhea. I want to make sure you read the document, make her confirm, and then say, will you honor these legal documents? Yes, I will. Great, thank you. Then I send a follow-up email. Thank you so much for the conversation and agreeing to honor the documents that were sent to you. And the reason you do that is because you guys, doesn't matter till it matters. You get a dispute on the other end. You got 500,000 sitting in escrow and the seller says no, right? And there's a dispute. You got to have a clear paper trail that said, I got legal documents. The escrow officer confirmed this. I called, right? There is no court of law or human that could say, no, that's ambiguous. Right. So this is where OCD comes in really, really handy. You know, you check, triple check, quadruple check, and then, you know, then pull the trigger, right? Pull the trigger and have a system and a process to manage all of this because it gets out of control. I mean, look, when I first started lending, I was like, oh, it's going to be fine. And then I was like, holy smokes. Okay, I got a loan that's late. And then, oh, wait a minute, I committed to this loan. And right, I just didn't. You know, I had to create the sheets and I had to create the systems. And then I was like, wait, we got to bring AI into this. So now we have a website where it comes through, it automatically populates on the Google Sheet through AI, through Make, and right, everything. Then it triggers and it goes right to the underwriting team. And as soon as they change the status, it triggers a notice to me, management review. That's me. I'm the final check. Yep. Good. Deal's good to go. Then I change the status and it goes back to the team and the team starts the paperwork. Right. So there's a system to it so that you can do volume. Otherwise, I mean, look, you can do loans. You don't have to have a system like this, but you can't do a lot of loans because it's like a full-time job.
On
Does
the
that-
fractional,
Yeah. Hi,
I'm
Craig.
sorry, on the fractional deals, is there, are they are some of them longer term deals where you have an equity stake as well as an interest, or how does
No.
that work?
So the fractional $1 million fractional co-pilot community, it's between 12, each deal is between 12 and 15% simple interest. Sometimes it's paid monthly and sometimes it's paid at the end of the project. So like land typically doesn't, it's not monthly. So somebody, a land investor, I'm a land investor myself. I run a land business. They come to me and I'm a land funder. They come to me and they say, hey, Rhea, I've got 212 acres in Shirley, Arkansas, and it's $250,000 cash purchase. Can you be my funder? Yes, great, no problem. 12% simple interest that's going to come, it's going to accrue monthly and get paid out at the end of the project. Because land investors, right, there's no cash flow from the project in order to be able to, right, and typically they're trying to do volume, right? So if they had to pay, monthly interest rates for every one of them. Now, when I do fix and flips, those are monthly interest rates. You have to pay a monthly interest. And some are 12%, some are 15, because some of these land deals are super juicy. And I want the co-pilots to participate in the upside, right? So I won't, land deals, we want to buy them at really steep discounts. And it's hard to comp land. Not a lot of people know how to comp land unless you're a land investor. That's why there aren't a lot of land funders. So I get massive amounts of deal flow because I'm a funder and I'm a land investor, which is unusual. Usually you're a land investor or you're the funder. You're not both.
So, question follow up to that. Fractional takes how much of the percentage?
Well, to commit to being in the fractional community, when you click that big blue button, you're just committing 2% of whatever you're contributing. So if it's 25,000, it's 2% of 25,000. Then in about a 2-week time period, that's when you have to wire the rest of your money in, right? So like whatever it is. Now, fractional takes a piece. I think it's the 2%. Actually, it's the 2%. Sorry, that is fractional's piece. Fractional takes 2% of the profit. I'm still committing to the 12 to 15%, right? It's coming out of the rest of it. The team that's in the fractional LLC, they're still going to get between 12 and 15. You guys don't get watered down.
But my net would be 10%, correct?
No, you'll stay at 12.
Well, when I figure in the fact that I had to pay 2% to fractional to get in initially, if you're paying me 12, then in that example, I would net 10%. Is that right?
Yeah, you pay the 2% to hold your spot, and then you put your full amount in, but it's less the 2%.
Yeah. But I'm still trying to think of netting my net gain on the deal when I take into account all transactional costs, which I would consider fractional to be one. In this simple example, it would be 10% because I paid. No?
No.
Yes, it would.
No.
I pay the fractional. It doesn't come out of your share.
Okay, that's what I was missing.
Yeah, you net between 12 and 15 on each one of the deals.
Okay.
Yeah, that'll just come out of my side, right?
Okay, there we go.
Yeah.
Now I'm
because honestly,
Hey,
10%
Rhea,
not a. Mhm.
Rhea,
Yeah.
follow-on question to that though, then since the 2% has been taken out of the 25,000, it's really 24,500 that we are actually investing. So that 12% is then on the 24,500, not the 25,000, correct?
On the 25. Mhm.
It's on the full 25 and not the 24,000?
On the full
Okay.
25. Yeah.
Okay.
Okay.
Yeah, because we don't want you guys to be watered down, right? So the fractional, whatever. So the reason I moved Copilot over to fractional was simply because it's so much easier to administer Copilot, because I've been doing Copilot with other people and my team has been running everything. And so there's a cost, right? Like I pay them salaries. And so the cost, right, for my team to do all of that back end. So now they still have to do all the underwriting. We still have to have the deal flow. I have all the websites. I have everything that comes in through Go High Level. Somebody needs to look at that. All good, right? But then we had to manage, like, oh my God, okay, we got to manage the distributions of the money. We got it like that's a heavy lift. Right. So now I can move it to fractional. Fractional is going to take a fee for that from me. I don't care. That's good. It frees my team up to do what they should do, which is make sure we have awesome deal flow, make sure it's underwritten, make sure those comps are tight, because by the time it comes to me for management review, I don't want to have to ask any questions. I want everything to be there and go, yeah, this looks good, or nope. I don't even really want deals that we wouldn't do to come to me, right? Because if it's on the fence, just don't even show it to me. And then when it comes to me, then we've got it systematized. So no, you will net between 12 and 15.
And have an equity stake as well.
Yes.
And what might that look like, just from a
Yes.
process perspective?
Absolutely. I'm glad you asked that. So if you click on my fractional community, you'll see there are projects. So the first project that I have up there is this thing called the Copilot $1 Million Investment Club. And that's the first one that I started. But I also have other projects. So for example, I just bought a mobile home park. And I bought it with 5 other, in fact, I bought it with Pace as well. Pace is actually he's in a joint LLC with me and other people. And what happened was, I knew of the deal. I looked at it. I was like, oh, this is an amazing deal. And I went to the deal sponsor and I said, hey, what's the story with this deal? And he said, I'm having trouble, raising them. It's closing next week. I haven't raised the money. I need $675,000 to close it. And I was like, let me take a look at it. And he had come to me and asked me if I wanted to be an investor. And so I took a look at it and I had my team underwrite it. Again, sometimes people underwrite it, but we take it through Mohammed's process. Mohammed has a very rigorous process, because Andrea will appreciate this. He's a director of finance. Like, he's underwriting in ways that nobody else does, right? Which is awesome. So then I looked at it and I was like, wow, this is like phenomenal, right? It was supposed to be a sub to some other things. And then I said to the operator, I said, if I can raise all of the money, I want an equity stake in the project. And he was like, if you can raise all the money, like, girl, because I got hard EMD and I don't have the money yet. So I made 2 phone calls to people that I knew wanted to be a part. They wanted to invest money in something that cash flowed right away, that also had an equity multiple. Because it was like, one was IRA money. No, both were IRA money. They wanted to put their IRA money to work, is for equity. So I called them and said, here's the deal. Here's the underwriting. Let me take you through it. I'm going to be in it, but I'm just calling you guys to see if you want to be in it. And then they said yes. And we all went into an LLC together in the name of the property. But so you need to stay at 5 people or less in the LLC, right? You don't want to break security. You don't want to be selling a security. And everybody that's in a joint operating agreement like that has to have a role. They have to have active participation. That's what the SEC sort of qualifies for. You cannot be viewed as selling a security, right? That's like, I don't look good in orange jumpsuits. Like, that will not work. So, we had to make sure that those were coming in. Like, you have to have an active role. So be prepared. I'm going to be the CFO. The sponsor is the GP sponsor, so to speak. And you're all going to have to participate in quarterly meetings. You're all going to have to look at the financials. We're going to have to vote on things. We're going to have to document the vote, right? That's how you administer joint LLCs like that. But Corey, to answer your question specifically, in other projects, maybe we syndicate. So for example, I own a hotel in Dover, Vermont. Corey, are you coming to that? No, I don't think you are. Sorry, I thought it was somebody else. The capital raise on that was $2.3 million. So we weren't going to get 5 people in an LLC, right? So we did a syndication. And so we hired a securities attorney who did a PPM and did the proper syndication documents. And then we did a capital raise from accredited investors only and brought them in as LPs. So the structure, just depending on what the deal is, that's more complex and has more administrative kind of hurdles, right? You got to be very careful about how you run a syndication. There's software, syndication software. You get sent quarterly. These are your investors, right? You've sold a security, so there's a level of you're a fiduciary. So there's a different kind of behavior. When you're all in a joint company together, right? You're running this asset together. I sort of run them the same. We have quarterly meetings. We look at the P&L, we look at the cash flow statements, we collectively make decisions, we document just like Rob's rules, right, on how we're doing this. We keep them in the shared folder, and everybody has full visibility because that will avoid arguments down the road. Well, I didn't know about this. You didn't attend the meeting, and we sent out the meeting minutes, and here are the Fathom notes, and right, these are the decisions that had to be made to, like, manage the asset. I have an opportunity, actually, fingers crossed, you guys. It's a crazy mobile home park in Florida that myself and Spencer Bishop are, we put an LOI in, and we're waiting for a response. I do everything creatively. That's not true. I will do Fannie and Freddie debt with a seller that carries in second. I have a Fannie Freddie lender that will allow a seller to carry second. Crazy. Yeah. But it's Andrea, I see Andrea's face. You have to structure it correctly, meaning I have to go into their LLC. So I don't do, so typically what happens, they have an LLC, they want to sell the property, they stay in the LLC, I come into the LLC. So it's, right, we just rewrite the operating agreement and we change the structure. So then we do a refinance. It's refinancing with the same lender that did the finance on the front end, right? So they know the history of the asset, they know the debt service coverage ratio, they know the players, but there's more risk to that because I've now come into an LLC and I don't know what that LLC's done before I got there. So I want some indemnification from wrongdoings, some other things, right? But Corey, to answer your question, I have another project that I am getting ready to take it from me, not for beginners. Yeah, right. Yeah, Corey. Yeah, right, exactly. Another project, Patrick raised his hand. Yes, I'll come to Patrick. A mobile home park. And so we just put an offer in. We're buying it on seller finance. The seller wants 900,000 down, but it's a $14 million exit once we stabilize with phase 3 and phase 4. And so $900,000, right? You got to get some big chunks of money to stay under the 5. And you got to have aligned, right? Like Corey, like you want to make sure let's say you say, hey, Rhea, I've got 500,000. I'd love to be a part of that. You're going to want to know me. I'm going to want to know you. You're going to want to know Spencer. Tell me how you guys think. What happens when the shit hits the fan? Because things sometimes don't go as planned. Like, how do people behave when things don't go well, right? I don't know about you guys. Like, I'm up all night, my head is like constantly trying to solve the problem. And I don't do it gracefully, but I'm constantly like just rolling my sleeves up, right? Like, I've seen other people, right? They get like overwhelmed, they hide, they can't, right? They can't. So knowing some of that, you want to make sure when you're in an equity ownership position with other people that you're aligned. And I always ask, I do this now when I am in a situation like that. Like I typically ask them questions about financial wherewithal. Like, hey, if we all have to put money into the project for whatever reason, let's say like the poop does hit the fan, is everybody prepared to do that to some extent? You don't like, oh God, yeah, we got to put 500,000 in each. Like we may not be liquid to that extent, but like when we do the underwriting, we do a sensitivity analysis. What's the best case scenario? What's the worst case scenario? And what's everything in between? And then you look at that and you say, okay, what does that worst case scenario look like for us? Ooh, that's really bad. What's the likelihood? By the way, we don't plan for black swans, right? You can't plan. A black swan is a black swan. We don't plan for that, right? If that happens, we've got bigger problems, right? Than worrying about whether we're going to go into foreclosure on our mobile home park. I mean, if the whole world falls apart tomorrow and the zombies come out to eat us, like I'm not worried about my syndications. I'm running around with a backpack on my back trying to save my husband and kid, So that's the way I think about that stuff. But the bell curve, right? You're looking at the front end of the bell curve, the back end of the bell curve, and all of that in between. And so those cash flows tell us that. What does it look like? Andrea, you'll understand this stress testing. We're stress testing the loan. We're stress testing this project. What happens if insurance rates double in Florida? Right? Insurance rates doubled in Florida, and some people who owned commercial assets had such tight underwriting, they didn't have a lot of meat. There wasn't a lot of profit. And then all of a sudden they're like, oh, it's not cash flowing, we're underwater. And they're going to their LP and making a capital call. Anybody ever had a capital call? It's an LP, like, we need $100,000, and that's what you committed to when you signed that document. So, yes is the answer to that, Corey. And I'm constantly underwriting. So I do multifamily, 70 units or bigger. And the reason I do 70 units, I learned my lesson. Don't do anything that you cannot bring in professional management. It needs to be lucrative enough for the property management company to be a professional. You want enough cash flow on the property to bring in the best of the best, because they will make or break your daily life, right? I want a property management company that is proactive and professional managing the assets, because I'm going to be the asset. I'm going to oversee the investment and they're going to run the asset. We are investors, right? So 70 units or more. Same thing in mobile home parks. I only do 70 units and more. I did do, this one was a 34 unit, but there is a professional property manager in place, and she's awesome. And she's gone through 2 previous owners, and she came with us with the purchase of this property. So that's different. Great. And it cash flows. Amazing. Her name's Georgia. She lives in the town where it is. She knows all the tenants. Like, oh, great. Amazing. Right. She's fantastic. And then, so I only do, I'll do any asset class that has a low operational lift, it cash flows, and it has an equity multiple on the back end when you go to sell it. But I don't typically ever think about selling the assets that I own, because I do cost segs on them, right? We do a cost seg so that we can take the accelerated depreciation. That's a huge tax benefit. If you guys don't know what that is, we can talk a little bit about that. I'm a real estate professional, so I need to write down, my husband married, filed jointly. He's a physician that runs the medical practices, right? So I got to write down a big, amount of money every year. And so the cost segs are very important. Everybody takes their pro rata share unless the operating agreement says something different. And then, yeah, so really any type of asset, with the exception of, I want to say this. So there's a lot like RV parks, right? Those are amazing. Michelle and Patrick Bisson, they do RV parks, and they do like the experiential, like the more hospitality oriented ones. Those are a lot of work. It's like running a hotel. I want mailbox money at this age. That's why I lend. And that's why I do like mobile home parks with professional management. I want to get it stabilized and get it rocking and rolling. I'm really good at that. And then I want to tie it up in a pretty bow, and I want property management to run it. And then I want to go run off and do it again and again and again and again. And really, it took me to be clear on what I like to do. Yes, Andrea. Is that you? No, it wasn't. Sorry, I thought that was you who said something. Does that help you, Corey?
Yes, it does. Thank you.
You're welcome. Yeah, amazing. Patrick, you've been so patient.
But no, the fractional, do we get the equity or the depreciation write-off? The investors?
Fractional is just lending, so you're either just lending or you're JVing, because in fractional, sometimes what I will do, if the borrower comes to me and they don't have a huge amount of experience, or it's a judicial state and it's hard to foreclose on properties, or it's a long process, I will ask the borrower to assign the contract to my LLC so I control the property. And then it's basically still like lending. Then fractional will JV with me, and then we control the property. So if the borrower doesn't behave, Something happens, we don't have to foreclose. There's nothing, we already own it. And then we can dispose of the property, do all the things that we need to do. But it just depends on each scenario. Make sense? Patrick, over to you.
Thank you. Thank you for putting these on as well. Very helpful, very useful. So I really appreciate that.
Yeah.
I have a question. So I'm also doing funding for land. So I have a couple connections that do land flipping. They'll buy it super cheap, they'll list it on the market or sell it straight to developers. And so I'm actually funding it. I'm actually the one that's buying the property. I hold title, funding, holding title, and then on the back end, we're selling it on. It's kind of set up. I'm sure yours is very similar. It's a waterfall payout depending on time of market, how long it's sitting on the market versus how much you put in as well.
Exactly. Yep.
So I ran out of money and I'm trying to do more of these. And so I am trying to figure out how to leverage other, and I'm new to fractional. I haven't done a lot of research into it, but I'm trying to figure out how to leverage because I was just going to go get a bunch of business lines of credit and start liquidating those as well.
Yep.
But it's kind of a two-part question. One is, where did you find your underwriter? Because I need to start removing myself a little bit. And two, I'm trying to figure out how I can leverage other people's money to do something very similar to you, like a co-pilot. But with fractional, we're actually physically setting up an LLC. So every time we fund one, we would have to set up a new one.
No.
Or okay.
No. So you want to do exactly what I did. I set up a fractional community. I set up a project. It's $1 million club. Everybody puts their money in, and then we fund. And I fund all sorts of things: land, fix and flips, lots of different types of assets. And those people that have put their money in, they want to learn and earn, right? That's what they're there to do. I don't know how to do this, so can I watch? And so you do Zooms. I do Zooms every week where I share, like, here are the deals that are going on. Here's the stuff that we have to vote on and then you use fractional. It's one LLC that everybody's put their money into. And that's the fractional LLC that votes to fund the deal that you bring to the table. So for you, Patrick, if you're like, hey, I've run out of money. I mean, look, this kind of the same thing that happened to me. I mean, I didn't fully run out, but like I had a couple of times where loans weren't coming back and I was like, wow, like they're not coming back on time. And I committed to like doing this and I had to pull money from a line of credit. Same thing happened. And I was like, and then I was like, well, I just got up my lines of credit then just to make sure like I don't, we don't ever run out. And so sometimes I dip in, sometimes I don't, but I have to leave wiggle room because if you make a boo-boo and you commit, oh, I can do your 400,000 and then the loan doesn't come back in and then they call you a schlep because you didn't fund their deal because somebody else didn't pay it back. So, you just have to get that balance right. So you could go and set up a fractional community to do this same thing that I did. You could do exactly the same thing that I did. And you explain the deals, show the deal flow, show the underwriting, show them what their return is, and show them your process.
Okay, perfect. Thank you.
The other part of your question is the harder one to answer. So I want you guys to know this. One of the hardest things to do in any business is to scale and hire and scale. It's like when we were scaling Imagine MD, my 5-location medical practice. I mean, our first location, we got it humming. We had all our systems and processes. Awesome. And when it was time to open number 2, right, you're pouring a huge amount, you're drawing down. Ooh, scary. Now you got to hire more people before you have the profit really for that, right? So you're drawing down. So like, it's like terrifying. Like, okay, God, I hope I'm right. Like I'm 57, like I better be right. Because if I run out of money at this age, like when I was building that company, like I don't have the same runway that everybody else has to make money back. But you have to take a bet, right? It was like, okay, we're going to pour this money in to open this second location on the expectation that creating a more diverse footprint will bring more employers. Ooh, it did. It worked. Great. Awesome. Then we start to get like, we're cranking out money again. Amazing. Now it's time for us to reinvest it. My husband kept saying to me, when do we get to keep some of this money? I'm like, we don't, brother. Pay attention. Like we are scaling and this money goes back into it. You pour it back in. And so when we opened 3 and 4, right? It was like, oh, we're opening 2 locations at once. It was hundreds of thousands of dollars, right? It was like, you know, $800,000. He was like, this seems like a bad idea because he's a physician. He's in scale businesses. He doesn't even know the economics of this stuff, right? Like that's not his thing. So our businesses, you guys, are no different, right? They're no different. And so when you hire people, look, I've hired people that are not so great and I've had to burn through them and I've had to let them go with love, right? Some I've let go not very well because they didn't know how to do it very well, right? But you learn and you put your big girl pants on and you learn how to be, right? You know, this is not working out. It's probably not the right fit for you. You know, this is not working for us. We wish you the best of luck. Today's your last day, right? Like you just figure out how to do it. It's horrible. It's uncomfortable. I have found, so finding people is really, really hard. So Mohammed is my CFO essentially, and he oversees all of the companies now that I run. And he came with me. So when we sold our company to private equity, he essentially thought like, I'm out of a job. And I'm like, no, you're not. You come with me. But so he came with me into my investment businesses. But I want to tell you guys one thing. This is really important. If you don't give the people that work for you that are excellent an opportunity for their dreams and goals to fit inside your dreams and goals, they will leave you. So, you know, if somebody wants to be an owner, like Mohammed came to me and said, I want to own a company, Rhea. And he's in Pakistan, by the way, he's Pakistani. I want to be an owner. Like, and my instinct is like, well, I don't have an ownership position for you, right? Like, just keep being who you are. But like, if I don't help him realize his dreams and goals, he's going to leave me. So I made him an owner. Make him an owner. Help the people in your company meet if it fits within your framework, right? Give them a piece of what it is that you're building, because you can't. If they leave, all that intelligence walks out the door. I will tell you, Patrick, I spent, you know, I still do things like this because I get to meet amazing people like you guys. I spent the first 2 years in the investment groups and I joined a lot of them. I joined Black Card, Sub 2, Joe McCall's land flipping group, Vina Jetty's Multify. I think I spent 30, 40, 50, 60, $70,000 on masterminds. And I'm really cheap. Like joining Pace's Sub 2 was like I almost couldn't pull the trigger on it. Then I realized, oh my God, that money comes back to me tenfold. Like stop being so cheap, right? There's that OCD, like trying to like, you know, hang on to everything. And so it has been a huge benefit. I'm in everybody's group. And I'm in mixing it up all the time. I make sure people know I'm a lender, I'm a borrower, I have deals. I show snippets of my underwriting. I show processes. I give stuff away because anytime that I give something away, it has come back to me. Always comes back to me tenfold. So for you, as you're thinking about hiring, I would spend a lot of time just like connecting with people like, hey, what are you working? I just hired a acquisition manager in my land business. Awesome guy from Canada. His name is Amar. I found him in Sumner Healy's Discord group because I put up
Really?
there, I'm looking for a rock star acquisition manager in our land group. And then I told them what I did. We've done $1.4 million in the first 12 months in our land business. Like get them excited about being part of your team. Like, wow, that's amazing. I get to be part of a rock star team that has like lots of money to spend on marketing so that he can, and he makes, you know, in land, you know, acquisition managers make between 4 and 7% of the spread. Well, he makes 8%. Why? Why are you paying him so much more, Rhea? You know why? Because he's not going to leave me. There's nobody who's going to take him away. Because I'm paying more than anybody else. Right? So like that's a total life hack. My Filipina team that do like, they make $6 an hour. Most people are paying 4, sometimes 3, 6. I want you to be able to feed your families and go buy nice dresses and eat lobster on the beach, right? And those are US dollars, right? This is what we, you know, when I've been more generous, it has come back to me 100-fold. Mike, who's on here, he looks like me. He's got my picture. He's like my executive assistant, my right-hand man, my project manager. The guy's a rock star, right? And he's from the Philippines. And when Mike asked for the money that he asked for, and I won't tell you how much he asked, didn't even question it. Didn't even say, well, we're paying this amount. It was like, great, sign me up. Because if Mike didn't turn out to be great, it would have been like, oh, we would have been having a different conversation. But it turned out that Mike was a rock star, and I'm happy to like make sure that he feels fairly compensated. So
Yeah.
I just share that with you guys because that's been a really important part of my journey. Really important.
That's really good feedback.
Yeah, appreciate
Just
that.
one follow-up question on fractional. How long does the money sit idle on average from the day we wire it to fractional until the day it's deployed?
Well, if I do it right, we're going to deploy it all right away.
Because
So
I'm looking at your spreadsheet here. It's the number of deals that are there, and so that's what drove the question is,
yes, yes. So we very quickly had to get that put together to put up on the fractional page, right? Because I knew I needed to demonstrate to show you guys the deal flow. That's actually a live sheet that we're populating. We get at least 4 to 6 submissions a day right now, a day. And so, I mean, I have a 4 million. We're not going to fund that 4 million because I don't have 4 million in my fractional. There's one that's 4 million. But I get so much. So the answer to that is I'm going to stack it all up. And hopefully we've got like 8 or 900,000 to literally pull the trigger on. Now, sometimes close of escrow isn't right away. So like the money will go in, fractional will close the LLC, everything will get done. They'll do the paperwork, and then we'll just start funding deals. So I would say it's probably going to take 4 weeks for it all to get deployed. Because if close of escrow, like sometimes like close of escrow is like, well, it's going to be 2 weeks. Right. So if some of them are already teed up, which they are, you can see the ones that are like agreed to, they're already teed up. They're already ready to actually fund. And if fractional's not done by then, I'm funding them myself. This is the stuff that I do. And then we'll keep adding to that. But my guess is it's going to take us 4 weeks to deploy everything.
Let me see. So you got a deal here that's like 78 grand. So if somebody puts 100 grand into it and there was only one person in your fractional, you'd be good to close that and still have another, 22 grand. Okay. All right. So
Yeah,
you're
and
not
actually,
waiting. Go ahead.
it does. So we don't take it from one individual person in fractional. All the money goes into, yeah, it's pro
Yeah,
rata, right?
it was just an example. Okay, cool. Thank you.
Yeah, yeah, you're welcome. Yeah. Yeah, and we're just going to keep adding to that, right? We're just going to like pile it on. Here's another one. You don't see the deals. Andrea says you don't see the deals on fractional.
Yeah, I don't know where, I mean, I'm clicking on fractional, so that's why, hold on.
Okay. Can you see my screen, you guys?
Yes.
Yes.
Copilot program. Oh, I'm sorry. Hold on. Oh, I'm in published changes. Oh, sorry. Never mind. Let me go back here. Okay. Wealth building with Rhea, and then you go to project. So I have a project. So this is my community. And there's just some stuff in here, like I had some get ready. And then look at the project. This is my first project. It's Copilot. So there's $400 committed already, 400,000. Then when you click on this, okay, and it's going to give you a description. It's going to give you a couple of the posts that I put up, and then it's going to give you a description. Welcome to Copilot. Okay. And here's how it works. And then what you're going to do, it's just a little bit about me, and then example list of deals.
Oh, okay. I just
Yeah.
didn't go down far enough. Okay.
That's okay. And this is live. This is a live sheet. This is like, let's see, this got added today. I know this got added today. There you go, right there. Yeah, 418. Well, he just got added the other day, and they're underwriting. See, these are paid off. This one's submitted. We haven't even started underwriting. We're waiting for some more information. Sometimes they don't send us everything at once. And then if you look at this, This gives you an idea. This is a process and timing. This is our internal process and timing. Gets submitted within 12 hours. Somebody's underwriting it. Within 12 hours, it gets to management review. Management review is me. I'm the one who gives the final say on every deal. That, yeah, this one looks good. I would fund this with my own money. That's what management review says. And then within 24 hours, it's approved. And then it would come to fractional. And then this shows you an example of what the due diligence, I can show you guys if you want me to. You want me to show you the due diligence reports? Here. Here's a due diligence report. No, that's not it. Sorry, guys. Hold on. Where's my due diligence? Let's see. Here's one. Okay. Here's a due diligence report. Here's what it looks like. Here's the property address and the county. And then we have like 5 to 10 acres. And we have like the lots. And we do average days on market, median sold acreage, median price per acre. We drill down to the zip, county and zip. Then we look at all of the comps. Now, by the way, this Patrick will know this because he's a land guy. Patrick, we do deep dive in land insights. If you're still here. Do you know Land Insights?
Oh, Patrick has dropped off, Rhea.
Oh, he did. Okay, no worries. So then what we do is we comp it. Comp team 1, comp team 2. We have 2 people internally that do comps. The operator tells us they think it's 139,000. Because guess what? They're the operator. They always think it's worth more than it is. We comped it at 96 and 130. So we do an average. Maybe 121. So we're going to fund this one. This one looks really good. We like it. We fund it. We are at LTV is 64%, nice and safe. Totally equity in it, all good, as long as like, the zombies don't come for us tomorrow and everything falls apart, we should be fine, right? Again, can't plan for black swan. We typically plan for what's inside the bell curve. And so we're going to fund $78,000 and payments, right? We're saying it's going to take 6 months. They said it's going to take 4. I always put extra time on there because, Andrea, they like to say it's going to take me 3 months. You go, really? I don't know. You haven't planned for any contingencies. You haven't planned for your contractor not showing up on Monday or Tuesday. So that's what it looks like. And then if you go over here, so that's the due diligence report, and then it talks a little bit about fractional here. Does that make sense? And then if you look at right here, this is you complete your deposit. So if you click on this, right? Let's see what that says. Click on complete deposit and you put in whatever you're putting in. You can put it in through your 401k or STIRA, or you can do individual, right? If you go like this, you select it, then you continue to payment, and you can do whatever. You can do a bank account, you can do your card, because it's just your 2%. Right, that you're committing to first. And then fractional, once we close everything out, right? Once we raise the $1 million and we close it out, we say, okay, project's closed, then fractional does the behind the scenes paperwork, and then you'll wire in the full amount, and then we'll start funding deals. And every month we'll come on, right? I'll do a Zoom and they'll all be recorded, and we all kind of vote on, yep, this one looks good. And then we drop the Zoom link in here so that people who weren't able to attend can watch it, and then they can have and give their say.
So when you're actually depositing it, you're not putting 25,000 in there right then and there.
You're not. You're just holding your spot, because once we reach $1 million, we're done. No more investors. We close it out. Yeah. Make sense? Awesome. All right, I'm going to take like 1 or 2 more questions. Corey had to. Yeah, how are we doing there, Mike? Am I back?
Yeah, well, Rhea, there was a question from Joanne Brewer Deli earlier and Brandon Perry.
Oh, great. Okay. Hey, Brandon, why don't you go? Or Joanne.
Hey.
Joanne.
Oh, yeah, go ahead, Joanne. Go ahead.
I don't know who asked first. Whoever wants to go first, doesn't matter.
Joanne.
Joanne, go ahead.
I had just, when I was looking you up on your bio and stuff, you said you invested in boutique hotels, and I just started researching boutique hotels and wanted to know if you had plans on buying any more, and would the fractional group help to help me understand how to buy my own boutique hotel one day?
Yeah, actually, I just put the link to our offering memorandum in the chat for when we raise the money for the Inn at Mount Snow. If you want to, oh, that was a direct message to Mike. Oh, good heavens. Sorry, hold on.
I can drop it, Rhea. I'll just drop
Okay.
it.
All right, never mind. I just dropped it. It went to everyone. You can take a look at how we prepared the offering memorandum for our investors when we went to go and raise the money. So fractional is more not, I mean, I'm not going to be bringing boutique hotels, right? Because that's more of a project. I'd have to create a project because they're typically more expensive than, funding $150,000 or even a $300,000, right? Buying a boutique hotel, it's a couple $1,000,000. Maybe you need 500,000 down, maybe you need 800,000 down. Hopefully you get it creatively. You might have to like completely redo it. You need working capital. There's like you can get SBA loans and other things because it's private equity and real estate because it's a business and real estate, right? There's two components to that. But listen, I would be happy to share with you. I'm actually at the Resilient Investor Conference. I'm going to be talking. A case study is the Inn at Mount Snow. Everyone's staying at the Inn at Mount Snow, so they're going to experience it firsthand. But we're actually going to take them through the case study, have all the before and after pictures, and to tell them what went well, what didn't go well, right? Like the good, the bad, and the ugly, right? Like everything you wanted to know. And then specifically with a business like a boutique hotel, there are some operational issues that you have to think of. So if you haven't run a hotel, right, you're going to want to think about that, or you're going to want to bring in an operator. You're going to want to bring somebody who has sales and marketing, understands the group business market. I'm just going to show you guys one other thing here, just because you were asking. Like somebody has to have the experience of like, how do you put together brochures? Like in a fix and flip, right? Like you have to have tools like this, and then you have to sell and market this to the group market in order to book your hotel in off season. So, do you have the skills? Do you have the ability? If you don't, do you have the people that you can bring that could bring this expertise to the table? Right? The lock systems, the property management system that we have, right? It's called Muse. All of that is technology. It's all Wi-Fi enabled. It's all managed on the back end. So like some of that somebody has to have that experience or be able to learn it on the fly. And I can tell you, learning that on the fly is not easy. Yeah. Because you're running a hotel. Right. So, okay, great. Now we got to do breakfast and we have, oh, guess what? Like we have a guest complaint or we have, somebody's walking around with their skis on our expensive Italian, tile, like their ski boots. Wait, like hiring, right? We need our housekeepers. How fast do they turn the room? What's your cost of goods? What's our, margin? Like, because it's a syndicate, we have to report this out to our LP. So you can't just report like your P&L, right? There's some more to that because we're a business as well. You got to pay taxes. We're getting a liquor license, workers' compensation, property management. We own the property management company that provides the property management, right? So we vertically integrated, but boutique hotels, super fun, super sexy, heavy lift. I don't know about you, Joanne, but I need mailbox money at this point in my life. Can I please just have mailbox money? Don't make me work harder. Right? Awesome. I'd be happy to share any more thoughts on boutique hotels with you. Absolutely. Brandon.
Later.
Yeah.
That's a lot to chew
Awesome.
right now. Thank you.
Welcome. Brandon.
Brad, thank you so much for your time. I know it's been over an hour, but I listened to you first of all on Joe McCall. I'm doing his land flipping course right now. I have some properties under contract. So I got really encouraged by you because of just when you did that interview, I think it was September, October last year, you're systematized. And I just hired my first VA yesterday. And I'm just like, okay, great. Now what? Like, what do I make them do? So like, what is the first thing you want the assistant to do to help you build your business? Like, that's all I need to know right now.
Yes. Absolutely. Okay. So your Joe McCall Freedom Soft, are you using Freedom
Correct.
Soft?
I am. I
Okay.
know you said you weren't. It's not my favorite, trust me, but I'm just using it.
Actually, we used Freedom Soft at first as well, and it works incredible.
Okay.
Look, they all, honestly, go high level,
Sure.
Pebble,
Sure.
Freedom Soft, doesn't make any difference. Just make sure you're sending offers. Okay,
Right.
so the very first thing, right? You got your list, you're doing mailing, and the phone calls are coming in.
Correct.
Great. What you're going to do with your VA, male or female, guy or gal? I don't know.
Female. Yep. Philippines. Yep. And she's awesome. Yeah.
Okay, awesome. So she is going to be, she gets the call, or
Okay.
the call gets dropped into voicemail. She's going to
Hmm.
look up, she's going to connect it to that. She should comp it. Maybe you and her comp it together to make sure that you're on the same page, right? So
Okay.
make sure she knows how to comp it, or make sure you teach her, go through Joe's thing and like look at all the ways to comp it. So usually so when we first trained our team, our customer service team, we sat beside them and like showed them like what we knew, what we didn't know, and what we were learning together,
Hmm.
because in the beginning, like it was like me and
Right.
Imelda. I don't know,
Well,
we're
I remember you
sending.
said on the episode, you said, oh, you called up one of your friends, said, hey, we're in the land business now. So yeah, it was such a fun episode.
That's kind of how it went. I mean, it's crazy. I mean, there's 12 of us now. It's crazy.
Oh,
Um,
wow. Okay.
yeah. Okay. So then you're going to show her, you're going to sit beside her and say, here's how we comp it. And then
Hmm.
you're going to tell her what pipeline. I don't remember if FreedomSoft has pipelines where you like, oh, we did. We created some pipelines like send offer. So once it's
Okay. Yep.
comped, we would tag it send offer. And then we would make sure at the end of the day that offer is right and that the merge is working out correctly and sending an offer. Then once the offer sent has to go into another pipeline, because the very next day or as soon as they get it, you or that your team member is calling. Hi, Joe, Rhea, I want to follow
Hmm.
up on the offer that I just sent to you and get your initial reactions. And then whatever that reaction is, right? Then you're going to go from there.
Hmm.
And let's say like, oh, hell no, because you offered something really low, because that's what you're going to do. Hell no.
Right.
You're going to get a lot of hell no's and some other choice words. Then you're going to stick it in some long-term follow-up
Hmm.
or
Okay.
whatever, right? Create some different follow-up cadences for the different
Okay.
types of responses that you get. And then what you're going to do every single week is you're going to go through those and look at those. You put a trace on them so that you just get notified when you need to actually call them.
Sure. Okay.
So that's what I
Um,
would, but in the beginning, Brandon, here's what I would suggest. You should be the one calling each one, because you're going to
mhm.
learn what those objections are, right? How do you navigate through that? What are
Right.
the conversations that you have? I'll tell you guys, a guy sold me his 20 acres of land in Florida, in Sopchoppy, Florida, because he
Mhm.
said I sounded cute. He sold it
Wow.
to me for 150,000. I have it on the market for $400,000. And I said to him, Chris, by the way, he's my Facebook friend now. After we closed the deal, he decided to stalk me on Facebook and said, forgive me, but are you the woman that I was talking to? Because my name is kind of unique. And I was like, yep, that's me. And he's like, oh, you are cute. Great. Right. Like, thank you. Thank you, Chris. The point is that I sound different because I'm a female on a call. Most land people are guys. So find your magic, right? And my magic is I'm just totally like, hey, Chris, this is Rhea Campbell. I'm just super chill. And we were kibutzing back and forth, and he gave me, he agreed to a great price. I knew he didn't really need the money because he told me about this mining business that he has. And I looked him up too, and I was like, this guy has tons of money. Like, why is he selling me his land so cheap? And then at the end of the transaction, I said to him, like, why are you selling it to me for 150? You know you can get a lot more money. And he said, you sound cute. Great. Thank you. Love it. Awesome. Sell. Thank you. Right? All good. So you're going to find your magic, Brandon. Whatever your superpower is, my superpower is that I'm a female in a male dominated business. That's it.
Sure. Sure. Okay. Awesome. Thank you so much. I appreciate it. I really do. Thank you so much.
Oh, you're welcome. If you need any help with anything, or listen, if you're having trouble, something, right? Like,
Mhm.
because I know the comping piece is mysterious in the beginning. Trust me. And you're probably like, oh, get it wrong. What if I make an all cash offer and then it's not right? If you're struggling,
Mhm.
please don't send me like 10 pieces of things to comp. But if you're struggling with something and you're like, I just can't get this, you can shoot me a text and you can say, could you
Sure.
look at this? We'll never poach your business. We'll take a look at it. We'll give it back to
Mhm.
you and run with the ball. And then just come to
Okay.
me and I'll fund it for you.
Sure, sure. Awesome. Comping is actually the easiest for me. It's actually just Florida. I'll be honest, I'm kind of looking at different markets now because when I call people, they're like, you're the 8th call I got today. You're the 10th mailer. So it's heavy. Like everyone knows their property is, going up now. So that's kind of the hardest objection for me right now. But
Yeah.
we keep going. So
Yeah, I love it.
awesome. Thanks.
Andrea said that she bought her first foreclosure that way too. I love that, right? You were a female voice on a
Yep.
call. Or Andrea, there you are. Yeah, female voice on a call. And they heard you and they connected with you. I had the same thing with a woman who was obviously going through a very difficult time in her life and she started to cry. And of course, I'm an empath, so I started to cry too. And we cried over what was going on. I cry at the drop of a dime, and we cried over what was going on. And she said, "Oh my God, if you could buy my property in all cash, that would be amazing." And I was like, "I got you. I got you." And it was like a really good price. And I thought, I want to give her more money. And at the closing table, I just put another $1,500 on it. I don't care. Right? Like, all good, right? Just tack an extra. And she was like, I can't believe this. So, you find your magic when you're talking to somebody and you just like, I just connect with people. Like I talk to them like they're real humans. And if they don't want to sell their property, awesome. If they say to me, I want 350,000 and it's worth 350,000, and I'm like, you should call a real estate agent to list it. Like if you're looking because you want market price, that's awesome. No problem. I can even help you. I know somebody that can actually do that for you. Because we don't want to, like help them. Because you never know when you help someone how they're going to come back to you. You just never know. It might not be like right away, but it could be like 3 months later and somebody remembers what you did and how you helped them and they come back and they like say, "Oh my God, you were awesome." That's happened to me so many times. Joanne, I'm glad you thought it was awesome. You guys are wonderful. We're going to end here if you don't mind. Thank you. So good to like see you and see different faces.